Hi, welcome to the Market Alert for Tuesday, the 23rd of April 2024. So, gold hammered, a short squeeze saved stocks ahead of macro storm this week. That's minor and major economic news items. US stocks clawed back some of last week's losses amid light catalysts, whatever that means. And economic news today, we've got the flash news out. Always a pain in the proverbial, this one, because it's released intermittently, as you can see from the time. So the market never really gets going. It's waiting for the next one to be announced. Apart from once we get past 9:30, then to 2:45 for the US. New home sales as well, and the Richmond manufacturing there. So let's have a look at the markets for yesterday and kick off with the Dow. So following Friday's attack by Israel, the markets rallied during Friday and Monday. This followed through, as you can see, but a bit of weakness around yesterday as the market came off the high, and also overnight the market is below the high of yesterday as well. At the moment it's just treading water, as you can see there at the DP and the close. Yesterday the market double bottom there, you can see, down to Friday's close before we had a spark of a rally to the upside. Not necessarily the plunge protection team here, just a short squeeze to the upside there. So the market needs to take out the high of yesterday in order to move higher. A lot of flash news today that could assist this. No major economic news, as I've already mentioned in yesterday's alert for this week. In the German DAX, very similar picture. The market up yesterday above the 50 EMA, the 5 EMA. Got a bit of a problem at the 20 EMA and just approaching the 62% retracement as well from here down to here. So this sort of swing high here down to this swing low. Market needs to take this out, and particularly the 20 bar moving average along with the 78 and 89 before it then heads to the next sort of swing point and resistance, which you can see we have there. So we've had a decent pullback in the stock markets now. They're oversold. Markets should be free enough to move back to the upside. 30-minute chart for yesterday. Market moved to the upside, had a shakeout to the 200 MA and the high of Friday before then moving to the upside once more. And overnight the market is above the close, but not quite above yesterday's high just yet. But no doubt the market will head in this direction. We just moved down to a smaller time frame so you can see this 5-minute chart, and I'll just move this to the left so you can see this is where it's already looking to attack, as the market's already come back and had a look a couple of times at this. And as you can see now, the market's starting to move back to the upside there in the 5-minute chart as well. In the S&P 500, very similar to the Dow, markets off the highs of yesterday and overnight sideways to higher. There you can see prices doing exactly the same. They trod water, came down, tested the DP, and then launched from there through the 200 MA, but this didn't hold overnight. The market is sideways but finding support at the daily pivot, and as long as it stays above the daily pivot, there's a good chance that it could attack yesterday's high. Meanwhile, in the FTSE 100, we have a new all-time high. And as can be seen here, even making the mainstream media news, FTSE hits new record high, helped by 5-month low for the pound. So let's have a look at this in a bit more detail. Yesterday we went to 80.65.8, and overnight this has continued to move higher at 80.75.8 as well. So no stopping the FT 100 at the moment, which you can see yesterday in the 30-minute chart. All of the averages in the right order. We've got black, blue, green and purple, and the market staying that way at the moment. But you can expect a bit of a pullback during this over the coming few days as well, as people will be taking profits from such a move. In the US dollar, sideways, which is interesting because, as I said in the narrative and also in the alert yesterday about the metals being hammered, it's only just started. They're going to hammer these down as far as they can, so let's have a look at those. But again, just note how sideways the US dollar is when you think that the metals should be inversely related, how they were actually crushed during yesterday's session. So let's kick off and have a look at silver. So yesterday you can see the market was absolutely pummeled to the downside, trading down to well below 50% now, but stuck at 50% yesterday. Overnight the market continuing to move lower. Interestingly enough, we don't have any sort of major tick volume. Maybe a different story for the real volume. So let's just have a look at that. No, we didn't get much yesterday. Was it the 19th? No, we haven't got the data yet for yesterday, which is interesting. So no, we're going to go up to the 19th. So not nothing to report there at the moment. Trade date is Friday the 19th. We haven't got Mondays there yet, so that'll be out tomorrow. But it'll be interesting to see what amount of volume was used. We saw the other week, or last week, where they had to use, it was a Friday before last, wasn't it, when they had to use 1.4 billion ounces to get the price down. So it'll be interesting to see what was required to send the market down yesterday, which you can see there. Out of curiosity, what is the range for yesterday? 27, make it $27, and we had a high of 28, so $1.50 yesterday, ballpark, to move prices. But it will be interesting, as I say, to see those volumes for yesterday's move, see how much it cost in paper silver to drive the market down. For me, the market's coming back down to $25, as it's a quiet week, got the opportunity to do this, why not? And then we may be free to move back to the upside after consolidating. But down again overnight, as can be seen in the 30-minute chart. So we've got a bit of volume there stopping the market at the moment and trying to bounce back above yesterday's low, and also get back above the $27 psychological level there. Meanwhile, gold the same, but nowhere near as much as far as being crushed. If we were to use the same sort of area for the swing high low pullback, you can see we didn't even get down to 50%. So obviously the impact on the gold silver ratio is going to be interesting in a minute. 30-minute chart, they've had a shakeout overnight down to the S1. A lot of volume, buyback, you can see there with the green volume, and price is sitting at the S1, but a slow decline yesterday for gold, whereas silver was rapid to the downside there, which you can see. It is more volatile, so no surprise. Let's have a look at the gold silver ratio, and no surprise there. As I said yesterday when I was recording, expect this to spike to the upside, and it certainly did, going up towards the 86 level. Market sideways overnight, showing a bit of red there, but I would expect this to go back towards the 90 level there before you see a bottom in this, because that's how it's worked for the last, I don't know how many years. They want to keep the gold silver ratio back around or up in that sort of 90 area, and as I said before when we looked at this last week, they'll soon bring it back above the level we see here, and sure enough they've done exactly that. Right, let's have a look at the intraday chart for yesterday, German DAX, and see what's happening overnight before we finish today's market alert. So yesterday, straight off, we see the market moving to the upside in the pre-cash session there. Futures trading up to the R1, market spiking to the upside. We then had a sell signal, and then I followed this down, moving the stop to break even, and then as the market came back, took the profits off the table. The market then traded sideways to higher and then spiked down once more. So I got out a bit too soon there. The 50 EMA doing its job of stopping the market from moving higher, and the 200 also having a bit of an issue there. The market then has the high from Friday to find support at, which it does. We just spike through, and then eventually we come back, as you can see there. We had another potential sell signal below the high. The market didn't fill it within the 3 bars. We had a potential buy. The stop was taken out before the market filled it, and then the same on the upside there as well. And then we were into the morning trade. After the 10 o'clock, the market started to move in a decent range until midday, when it then went back into a sideways move, waiting for the US. You can see it bouncing off the 200 MA there, the black line, as it found its range. And then market moving up with the Dow's electronic session. Cash market opened in New York, and the market sideways there. We got filled on the buy signal here, unfortunately. I say unfortunately because the 50 EMA didn't hold, and the market then came down and took this out, and then also down to the psychological level and just below towards the 200 MA before the market reversed and moved back to the upside. So that was a bit of a shame, but no surprise really, given there's not a lot of news, and today we've got all of the flash news, so the market will be using and making use of that to move prices in the direction they want them moved. So that's how yesterday's trades panned out. Let's have a quick look at overnight, see where prices are. Well, we started to head up towards the high of yesterday, but the market so far failing, 200 MA there, and not doing a lot. So obviously waiting for that first lot of flash news out at when is it out? Let's just have a quick look when the first one out. So it's going to be 8:15, which is going to be the French one. Just looking at it here in the software there. So 8:15 is the first one. Okay, that's it for this one. Let's see what happens in the metals today. I suspect we're going to get a bit more to the downside, and I can't wait to see the volumes tomorrow for today's. I forgot that they only released this a day in arrears. Should know better after 30 plus years, but yeah, it's always released the day after because they can hide it on and during the trading day, so you can't see what they're doing. Okay, that's it for this one. As ever, thanks for watching. See you in the next.